What we're going to talk today, we're going to talk about the role of financial accounting. We're going to talk about users of financial accounting or accounting information. We're going to talk about types of organization which are preparing accounts, and we're going to talk about purposes and presentations of accounts for sole trading business. By the way, what we're going to concern during our classes is the sole trader business. Okay, we're going to record the transaction for sole trader. We're going to all the things we are working, it's mostly for the sole trader. Let's start with the accounting. As you see that our subject, it's financial accounting. Okay, having that term financial before word accounting, it means we have another types of accounting also, not just the financial one. So that's what you can see in the photo here. We have many types of accounting, which is your friend, the BACC ones, they're gonna to study it all during their 4 years degree. The BBA, you will not go in details. Your main concern only for the financial accounting, because this is a thing which you may need as sole trader. We have cost accounting, this one which is concerning more about costing, and this one normally happening in manufacturer. Okay, so that the cost accounting is concerning more into costing, which is mostly important for the manufacturer. We have the social accounting. Social accounting is more concerned about social responsibility. We have like corporate social responsibility, CSR. So the social accounting has the details on how to record how the organization it's contributing to its social responsibility, the CSR. We have the tax accounting, which is more into taxation. You know, end of each year, you as any business or any company, they have to submit their files for the taxation system. So tax accounting is working into taxation, because there is a lot of modification need to be done for taxing. Okay, because different than what we have normally. Okay. And then we have the management accounting. Management accounting is also providing reports only for managers, because it's concerning about internal matters, concerning about reports for managers for taking decisions. Okay, so we have those types of accounting. We have the cost accounting, managerial accounting, tax accounting, social accounting, and we have the financial accounting. In our subject here, our concern is more into the financial accounting, okay? Which is we're going to study what does financial accounting mean, who are the users of the reports coming from financial accounting, and then we will learn how to apply the financial accounting. So let's start. Some basics of accounting. This is like somehow very general information. If any of you studied before principle of accounting or FA in your foundation or diploma, maybe you know that. Let's move to better definition. Yes. What is the financial accounting? We can define it as recognizing, measuring, recording, and reporting the financial transactions of the business. To whom we report to stakeholders. Stakeholders, okay, which are outside the business, including also the stockholders, the owners, and lenders. So financial accounting is not just recording transactions. Financial accounting it includes a lot of activities beyond the financial account, beyond the recording the transactions, because like the recording the transaction, it's mainly happening in the first step, okay, which is sometimes bookkeeper can do only as a bookkeeper. It doesn't need to be accountant. But when we go more in details, we will see that the accounting itself has far more steps comparing to the bookkeeping. So financial accounting, as we mentioned, is recognizing, measuring, recording, and reporting the financial transactions. To whom we do that? To stakeholders, okay? those who are interested to know about the organization, and we're gonna to learn after a few slides who are those and how they are classified. And also it provides similar information, not just to the outside stakeholders, also for government and some interested parties, such as potential investors, employees, lenders, suppliers, customers, and financial analysts. All of those, they're gonna to use the information from the financial accounting for decision making. What we conclude from that financial accounting is decision making, or sorry, financial accounting is information system helping for decision making. Okay, so that's what we need to keep in our mind, that financial accounting is not just bookkeeping. It includes both the bookkeeping, which is that the recognizing and recording transaction, also reporting those transactions and interpreting it for decision making. That's what accounting includes. What are the three key financial statements which we're going to learn how to make it by end of our subject are: first, the balance sheet; second, income statement; third, statement of cash flow. Balance sheet, it is the old name of it. The current name is statement of financial position. So the balance sheet named statement of financial position. Income statement, the current name of it is statement of profit or loss and other comprehensive income. Okay, so those the names again. What are the key three statements is going to come out of our financial transaction records? The first one is financial position statement, which is before was called balance sheet. Second one, profit or loss and other comprehensive income statement, which is before was called only income statement. Third, statement of cash flow. How to make those statements, or what the benefit of each one of it, we're going to learn it later as a last topic of our classes. So those statements assist in ensuring that financial statements are included in published report. We concern about including those statements in our published report end of each financial year. I think all of you, maybe you noticed that most of the countries, the companies, they're going to publish their financial reports, especially those who are publicly listed. Okay, so they're going to publish their financial statements just to show to investors, to show to the stakeholders and stockholders about how the financial position of the company, whether the company is making profit or no. And even those reports, they're going to be used by others who are considering giving credit line to the company, or dealing with the company, or giving loan to the company, as example, banks. So this is the main concern of those statements. So like this, again, what is financial accounting? We mentioned it's recognizing, measuring, recording, and reporting financial transactions to stakeholders outside the entity to take decision. What are the main three statements? It's a statement of it's a balance sheet, or what we call it financial position statement. Second one, it's the income statement, or what's called the profit or loss and other comprehensive income. Third statement is a statement of cash flow. So what is the role of the financial accounting, which we defined it earlier? The role of it is to maintain the scorecard of the entity. This is what we can call it, the role of the financial accounting is to maintain the scorecard of the entity. What does maintain scorecard of the entity mean? It means we need, by using the financial accounting, we record all the transaction we see how the transaction is going, how the company is going, whether it's making a profit or making loss. The financial accounting is concerned with the classification and recording of the monetary transaction. This is the things that you need to keep in your mind. The financial accounting, it deals only with monetary transactions of an entity in accordance with the established concepts and the principles and the standards. When we are doing financial accounting, we are concerning about our standards, the financial accounting standards, the principles. We don't record transaction as we deem fit. No, there is a standards and principles we have to follow and we have to know about it. Okay. And as we mentioned, concept, principles, accounting standards, and legal requirement and their presentation by means of which is what we mentioned, those statement, the income statement, the balance sheet, and the statement of cash flow during at the end of accounting period. So the time frame for the statements is the accounting period. What does it mean, accounting period? It's mostly coming as 12 months, which is 1 year. Most of the time, which is a rule of thumb, starting from 1st of January, ending by end of December. Okay, 31st of December. So this is what is normally is the accounting period. Okay. So again, what is the job of the financial accounting? Is recognizing, measuring, recording, and reporting financial information for the stakeholders. What are the statements? We have the balance sheet or statement of financial position. We have the income statement or statement of profit or loss and other comprehensive income. We have the statement of cash flow, those three statements. Normally, financial accounting role is to maintain the scorecard of the entity, and it's reporting only the monetary transaction. What is the time frame? It's the accounting period. Okay, let's continue. Here we're still talking about the role of the financial accounting. Within most companies, the financial accounting role usually involves more than the preparation of the main financial statements. A great deal of analysis is required to support such statements and to prepare information both for internal and external users, and do the annual audits by the company external auditors. So as accountant, as a financial accounting, we don't just record. We record, we classify, we recognize, we record, we classify, we make a report, we interpret the report, we collaborate with the external auditors, we make all of things to make our financial statements ready and able to be understood by users. What type of activities the finance department may do? Control of accounts payable to suppliers. You know, as accountant or as a company, we deal with suppliers. So the job of the financial accounting to maintain or to control the accounts payable with the suppliers. If our suppliers are if we are taking stuff from our suppliers with the credit line, which means we don't pay on spot. So we need to consider, as accountant, you will work with that. Control of account receivable. If your customer not paying cash, they are paying on credit. Also, it will be your job as accountant to deal with them. Control of cash, the cash itself, when there is sometimes withdrawal, sometimes pay in, money come in, money goes out from the account. So all of it is the job of the accountant, okay, to deal with. So the financial accounting role also usually include responsibility for payroll. Some companies, they do that for HR. Some companies, they put it under accounting. It depends on the company management and the decision on that. But yes, everything can be done as monetary transaction. It will be under the financial accounting department in the company. Let me check. Yeah, we'll talk about it later. Yeah. So this is the general about the financial accounting and what is the role of the financial accounting. And as I mentioned in the beginning, all those steps the financial accounting do, or the financial accounting does, the main concern is to be as information system, okay, to provide information for decision makers, which is very important. Who are the users of the financial accounting information? Those users can be classified to two types of users, internal users and external users. Internal users are managers, employees, um, owners. Those are internal users. Why we classify them as internal? Because they are inside the organization and they are affecting on the decision making inside the organization. They have more access to information. We have the external users which they are outside the organization, like our investors, creditors, members of nonprofit organization, government, consumers, research scholars. You're going to ask me why those people, they want to see our company information, the financial information. I'm going to explain. Investors, those who are potential owners. You as a person has money, you are concerning to use this money to an investment, okay? So you want to make sure that you are not going to put it in a losing project. You want to put it in profitable project. This is the logic. So as investor, you are concerning to see the financial statements of any company you want to invest in. Your aim is to see whether this company gaining profit, moving upward or downward before taking the decision to invest in. We have creditors. The creditors are two types. Some of them are our suppliers, which people we buy from them raw material or some product on credit. So those, they are concerning about the financial health of our organization to make sure that we will be able to pay them back the money. We have another type of creditors, those who are giving us loan, like bank example. So those creditors, they are also concerning about how our company able to pay back the money for that loan. We have members of nonprofit organization, which is concerning about our social responsibility of our organization and whether our organization fulfilling that responsibility and paying the money as it's supposed to be or not. We have the government concerning about financial position of our company for taxation, because they concern to give us the correct tax percent, to make us to pay the correct tax percent. We have the consumers, our customers. Our customers are concerning about the financial situation of our company for many reasons. Maybe if we are selling a manufactured product, so maybe our product is a raw material for another factory. Example, what example I want to give you? Yeah, example, this glue, okay? This glue, it has the plastic and it has the glue itself inside, okay? So maybe we are producing the glue. We are producing the liquid which is inside, okay? And there is a customer buying from us this glue to fill these bottles. So for us, that customer is customer. So why he is concerning about the financial position of our company? Because he need to make sure that we will keep supply him. Our company is not gonna to close and he need to find another supplier. Also, some consumer, as example, if you are an Apple user, your phone is Apple, so you are concerning that Apple company will continue, because if Apple company close out of sudden, so no more support to iOS, no more accessories for your phone, so you will be in a huge problem. So for that reason, you are concerning that the organization is continuing. And we have the research scholars, those people who are working in research. They are also concerning to see how the business is going on, how some type of businesses from some sectors of economy are succeeding or not, to just to build for future recommendations. So those what we can explain as internal and external users. Okay, let's continue. So this explaining that each one of those, what they are concerning to know, what is the question the financial accounting gonna to answer for them. Example, owners is going to tell them whether we make satisfactory profit this year or no. Managers gonna to tell them, can we pay dividends for owners? Can we give raises for staff? Employees, they got to know, did the company pay into the pension fund this year? Government, they're concerned about, did the company report the correct information to investors because they want to save the investors? Also, they're concerned about taxation. Investors and creditors, did the company generate satisfactory revenue this year? Shall we take the decision to invest in this organization or this company or no? So now we come up to new things. What we start? We start first defining what is accounting. We said it's the accounting. We said it's recognizing, measuring, recording, and reporting information about business transaction to stakeholders. We talk about the three main statements, which are balance sheet, which is a statement of a financial position, income statement, or the new name, which is statement of profit or loss and other comprehensive income, statement of cash flow, those three statements. Then we mentioned that the financial accounting only record the monetary transactions and is reported the time frame of its accounting period. And we mentioned the accounting period differ based on the business and the country. The rule of thumb, or on general, it's 1 year from 1st January to 31st of December, but still there is many cases it's different. The main role of financial accounting is to maintain the scorecard of the entity. And we talk about who are the users of the financial the reports with the financial accounting made. We classify them to two types, internal and externals. The internal, we said it's owners, managers, and employees. Externals, we said potential investors, creditors, members of the non-profit organization, the NGOs, government, consumers, and research scholars. All of them are considered to be users for financial statements. We come up to types of organization preparing accounts. What are the types of organizations that prepare account? Actually, we can divide them to two main categories. Like this, if we cut the circle like this part, there are non-profit organization concerning not about making profit, and we have another organization concerning into making profit. Example, like those who are not making profit, we have the voluntary organization, we have the public sector bodies, we have the charity. All of those are organizations, they don't concern about making profit. The other side, which is main concern or main aim, is to make profit. We have the sole traders. Sole traders is owned by one person, and this person, he owns everything in the organization. Some cases he do everything in the organization also. So it's owned by one person, he owes everything, and he has no limited liability, which means if the organization lose or if the organization take credit and couldn't be able to pay, they can go to the money of the owner because it has no limited liability. Second type, we have partnership, which is two or more partners in the business. This type of partnership is also has no limited liability. In case a company lose, they're gonna to go to their own personal money. We have the limited company. We have private limited and public limited or public listed. Private limited normally happening as a family business. Number of owners is limited, maybe reach to 20, or sometimes if it's a professional organization, reach to 50. And they have limited liability, which means they are responsible only about their share in the organization. In case the organization fail or bankrupt, they don't go to their own personal money. Same the public limited company or publicly listed. This is same as private, but here is shared. The shares are available in the stock market. Whoever wants to buy the share can do. And the benefit of this type of organization that also it's limited. Like you as owner in one organization, you buy stock. If this organization bankrupt, you will just lose the money you pay for your stock. If get profit, you will earn the profit. The share based on each share the share of profit based on each share. And in case the organization go bankrupt, nothing will come to your own personal money. So that what we can divide or classify the types of organization to non-profit and profit. The profit one, we have sole trader, we have partnership, private limited, public limited. What we are concerning in our financial accounting, the BAC 1014, is the sole trader. What are the purposes and presentations of accounts for sole trading businesses? What is a sole trader? As we mentioned, is a business owned by one person. This person doing the business and he own everything related to business, and even the liabilities are not limited. What does it mean? If the business lose, if the business even bankrupt, if the business is on loan, so can be go back to the personal money of that person. So this is the sole trader. I do believe those who are in Malaysia, they know this logo, the SSM, which is most of the entrepreneurs in Malaysia, they can register their company under the SSM, which is gonna to help them to have a company account, and they're gonna to open a bank account under the company name and these things. So SSM is the easiest, fastest registration way for those entrepreneurs to start their business. They can just fill it online, or the information go and recognize their IC, put the name they like, everything will be approved. The cost almost 30-40 ringgit. I don't think it's more, and they can register their company there. As we mentioned, the sole trader, it's only one person. There is no partners. He is responsible about everything. If we get partners, it will go to partnership. But as one person is a sole trader, all the transactions and all the accounting principles which we're gonna to learn during our classes are related to the sole trader. Okay, so this is which we need to keep in our mind. So what is the role of the accounting? What is the job of the accounting? Is recognizing the transaction. Recognizing the transaction is very important. We pay the bill, so we need to get the bill or the receipt of payment, and we need to consider is bill of what? Bill of electricity, bill of water, bill of phone, whatever. We give salary. Is salary of a worker, salary of manager, salary of what? Also, salary have some allowance, so we need to recognize the transaction and know the details of the transaction. Second thing is to measure the transaction, decide the amount of money we need to put in the transaction based on the receipt itself. Let's say the amount discount is 20 ringgit, but we get to discount 5 ringgit. So the price is 20, so we don't register 20, we register after the discount. Or maybe we register and we put the discount also. Then record this transaction, then report it for the decision-making purposes. So this is the job of the accounting. Last topic we're gonna to talk about it today is the difference between cash accounting and accrual accounting. This is what we're gonna to repeat it again in our next class. Cash accounting is only concerning about transactions can be done by cash, or not can be done, are done by cash. Let's say we have electricity bill. This one, the electricity bill, will not be recognized, will not be registered unless we pay the cash. We go and we pay the cash, or we transfer the cash online. Then the payment will be considered. While in the accrual basis, once we get the bill, once we are charged the bill and we have obligation to pay, so it will be considered whether we pay the cash or not yet, maybe next month. So this is the difference between the accrual and cash accounting. So the difference lies in the timing of when sales and purchases are recorded in your accounts. The cash account, they cannot recognize. So the cash account recognizes the business transaction only when cash is received or distributed. Accrual accounting recognizes the business transaction when it occurs, whether or not cash is received or distributed, which means it recognizes revenue when it's earned and expenses when they are billed, not paid. So this we need to keep in our mind, because earlier ages, they were relying only the cash accounting because everything was happening by cash. But later when they see that, yes, we need to sell and buy on credit, and we need to do matching between what we are paying and what we are receiving and so on. So for that reason, they come to the accrual basis, which means we recognize the revenue when it's occurred and the expenses when is also when is billed, not when is paid or received as cash. Okay, so like this, it will be the end of our chapter of today.